Hello, Devin. Thank you for joining. I hope you've had a great Sunday so far. I appreciate you sliding through and helping me out as I get through this. Again, you all admit. Hello, off top world. Nice to have you as well. Again, hit the chat box to speak, but I'm happy to have you guys. Appreciate you guys coming in. I'm just getting everything set up right now.
Good morning, bro.
Good morning, everyone. Hopefully everyone's well.
Blessed up.
What up, bro? Off top world. Nice to have you. Happy to have you in the Discord as well with your kind words. That was awesome. Hopefully I can provide some great value for the community as we move forward.
Thank you, man. You deserve it.
Thank you. All right, can you see me move the presentation?
Yes, we can.
Okay, cool. We got two more.
All good here.
Awesome. We got 2 more minutes before I really start. Again, disclaimer, I'm not a financial advisor. All investing, trading risks on your own, all the stuff. Hopefully you guys looked at the presentation before before today to get a good grasp of things. First 5 minutes, attendance, roll call, opening statements. The second segment, 35 minutes, I'm just going to go within the presentation. We have a lot of slides to get through, a lot to get into to focus on. In the last 20 minutes, we're going to have questions, answers, additional detail, discussion, and the close. We're going to make this a nice focused hour so we can get in and get out and enjoy our Sundays. It's snowing like crazy here in Salt Lake, but I'll figure out something to do.
Do you need us to cam up at all, or are you?
You don't have to be on cam.
Okay, I was just checking. I'm just kind of, do a little double tap. Yeah, appreciate it.
5-minute mark. Let's get it. Once again, thank you for everybody that slide through. It's going to be a good call. D.A.T.A Capital Conference Call number 1, Sunday, March 26, 2023. It's going to be the last Sunday of every month, unless otherwise stated. Hopefully, let's keep this up so we can keep each other accountable and we can learn a lot together. To start off with some Gematria, it's funny that D.A.T.A Capital conference calls equals 223 in English ordinal. We're in 2023. So numerically, energetically wise, it seems like it's the right time to do it. And then obviously we have the classic D.A.T.A Capital conference calls is a big step, but it's the classic 333. As you guys know, 0 is just a value placeholder, so it's the 33. So there's some nice energy here as we're sitting here today. We've already went over the disclaimers in the first 5 minutes. Again, everybody, we're on segment 2 for the presentation. And so here's the meeting outline. And I'm really excited for these outlines today. So the first one we're going to go over is the 3 M's of Wall Street. Then the left side of the equation sign, we're going to get into the credit events transpiring out like we kind of predicted when I had my February video and article that came out about Saturn and entering Pisces on March 7th. March 7th, like 3 days after Silicon Valley, fails as a bank, then it started a big, domino effect. So we're going to get into Sofi, which is one of the stocks that I did a lot of Gematria on, and then that's in the our growth stock portfolio. And then we're going to get into my D.A.T.A Capital dividend portfolio, the top 2 performers of March, the bottom 2 performers, and some honorable mentions, and we have some good notes, and then we're going to get into questions and answers. Devin, 1 is a placeholder as well. In some cases, it can be. But it depends on how you're decoding. In most cases, I just use it as 0. I just use 0. So for the 3 M's of Wall Street, on page 568 of Benjamin Graham's Intelligent Investor, I highly recommend this book if you have not seen it yet, if you've not read it yet. I just finished it maybe 2 weeks ago, and I've learned so much. It's helped me become a better investor overall, and it's maybe to see different things I haven't thought about before. But gematria wise, let's get into the three M's. In the book, it said the three M's on Wall Street is mystery, manipulation, and margins. Wall Street keeps info a mystery to manipulate because every dollar counts. Those slim margins. And when I read that, it made so much sense because in the stock market, if you a lot of these guys, how they get their gains in the big leads is via insider trading. They have that inside angle. But how do they manipulate retail investors to buy their shares at the top when they don't know the company's going down? It's to manipulate. It's to have that mystery because the retail investor doesn't necessarily know what's really going on in the back end. So the gematria decode I have right here is mystery manipulation margin, and it's 332. Now it's not necessarily the spot on the 333, which I like, but it's one off, and kind of how Devin brought up earlier, one could be a placeholder. Well, in this case, one is seen as a plus minus margin you're allowed to have with the rule of Colel in gematria. It says energetically, if you're one digit off, it's close enough. And so in this case, I feel like when it comes to slim margins, it's close enough to 333. Then we have mystery manipulation in Wall Street forces investors to manage the margin. 303 in reduction. That's the the English reduction, the purest reduction cipher. So that's important. 33. Another one, mystery, manipulation, and margin are the three M's of the stock market Wall Street lives by. 330 in English reduction. Then Wall Street keeps info a mystery to manipulate retail investors because every dollar counts. We have that, a beholden 333 in the purest reduction cipher. So that's a really big decode, and I think it really breaks down the reality we are in as retail investors in this market. So keep all this in mind and get that book. It's really worth it. Going on to the next slide. So if you guys are on Twitter at all, if you like me, I follow some financial analysts. Now, a lot of these cats, they're all bogus. Nobody really knows what's going on in the market, but a lot of them, some of them, the smart ones, they have nuggets you can pick up on to use for yourself. And that's how you should use any person you listen to for advice or, not advice, not financial advice, but for any type of educational entertainment purposes, including me. You don't have to agree with everything I say, but maybe you could take something that I have an angle on for your own thesis in investing. Now, for Michael Gayed, he's a pretty well acclaimed investor, a couple awards for a couple of his papers. I follow him on Twitter. He trolls a lot, and he even said, don't listen to any people, any talking heads on Twitter. But when I read this in October, it stood out to me. He says, amateurs look to the right of the equal sign. Pros look to the left. And one of his catchphrases, he says few, as in few understand this. And I kind of thought about that, and it makes a lot of sense. Think of an equation. In life, we worry, they always say, it's all about the journey. Well, the journey is on the left side of the equation. The result, that's on the right side. If you worry about the result too much, you don't worry about the left side, you're not going to have that magical formula that you're looking for. For Einstein to get E equals to mc squared, he had to do a lot of processing, and that takes time. That's on the left side. That's the same thing with the stock market. Everything happens for a reason in the stock market. All right, so you just have to make sure you're putting yourself in the right wave. And so for some gematria, this is what I have, and I think there's some really big decodes here. Left side of equation makes ritual. Again, everything's about ritual in this world, in this matrix. So that's important. 333. Left side of equal sign is a major key. 333. But it also equals 171 in reverse reduction. So it has two of the four, decodes in the four base ciphers. Very powerful. Then we have left side, parentheses, important mechanisms and processes equals right side, the result. 333 in reverse reduction. That's another big one, It's the equation right there. And even Warren Buffett says a lot of what happens in the Wall Street, it's a lot of magic. It's a lot of fluffy things just to get people bought in to stories. Magic equals results, 222 in English ordinal. We have to understand that 222 is important, just like how 2022 is important, because it goes back to Saturn control and whatnot. So I've talked about 333, 222 a lot. Those repeating master numbers. Results only matter if the left side of the equation is correct. And so let's backtrack a little bit to the finance stocks with Saturn entering Pisces from 2023 to 2026. All right, again, Saturn entered Pisces March 7th. Silicon Valley goes down 3 days later. I make a video in an article talking about, hey, if we position ourselves correctly in certain finance stocks, there's opportunity long term to get in at valuable prices, at discounted prices, and something that we can work off of. Because in a lot of these banking stocks, they have been overvalued. And so let's just go through a couple of the credit event banking crises. Credit event, the word credit event has been going on a lot lately. People have been talking about it. And so in March 2023 alone, for the bank failures, we had Silvergate, Silicon Valley Bank, and Signature Bank. So, and also we have to understand, looking here, Silicon Valley Bank was the second largest bank failure in American history. Right behind that, Signature Bank was the third largest bank failure in American history. And that's in March alone. And it's a bigger problem that could continue to unravel moving forward. So while, yes, I'm looking for opportunities in the banking sector, the financial asset sector, even the insurance sector, you have to be wary of what's going on. So always use risk management. And even we see internationally, it's also happening. Credit Suisse. We always think of Switzerland as such a powerful force with money, so stable. Everybody puts their money into Switzerland because it's a safe haven for the elite's money. And now you're seeing Credit Suisse goes down, and they have to get bought out by UBS, which is the bigger Switzerland bank. So everyone's feeling it everywhere in the world. But for myself and for a lot of investors, they have a natural optimism. And I also have a natural optimism as well, because I feel like if you bet against the world too much, you're betting against your quality of life and your own money. And while I do think America is going through some rough patches, I do think in general, through history and what I've researched and studied, America has always been a place where everyone in the world has gone to make money. When Egypt came over to get the copper for the Bronze Age in Michigan, when the Native Americans, when the Black Africans came over here, they set up trade routes through the Great Plains. They used, those obsidian reflectors as shipping, like they had Amazon Prime back in the day. And so when I read those stories, I understand America has always been an economic hotbed. So I don't think we're necessarily going down. And so with that being said, 223 banking crisis means bottom is in. 330 in English ordinal. Again, that 33. Look, the market's been choppy right now, and I think that means in long term we're going to be looking at a bottoming out in the market. I don't think it could get much worse. If we have a couple more big bank failures, of course, we need that to happen. But if you use risk management, you should be okay. Again, see my credit event article. You can go to dataproductionsmedia.com. I have that. And so now let's get into the bank that I've been invested in and then what I recommended to the Patreon members. Sofi Technologies, Social Finance Technologies, ticker symbol SoFi, SOFI. Now, this PowerPoint slide is a little old. I kept it up to keep it genuine as when I released it. All right, so when I released it, the screenshot was about 689. It's trading at 574 right now, which is okay because again, just because just because you acknowledge something, and you buy in, use risk management, and you buy even when it goes lower. And so looking at the chart, we'll go to Yahoo Finance too for a little bit more technical analysis. But looking at the chart, when it IPO'd, it went all the way up to 25. It's back now under 6. It's a growth bank. It's a growth banking stock. Headquarters San Francisco. The PE ratio, which is price to earnings. So they have about $5 billion in assets right now. So their PE ratio is pretty low, which is good. An average PE ratio on the S&P 500 is about like 20 to 30. They have a negative 19. So that's only one metric you could say that they're undervalued. Their debt to equity, which is also something I like to see, especially for good dividend companies, is having it under 2. So their debt to equity is 0.99. So it's even under 1, just a hair. Again, so you see, this is what I'm invested in right now. I have 82 shares of SoFi. My cost per share is $6.10. I've been averaging down, and like we're going to get into in the next slide, I have some notes of that CEO has been buying shares too. So, but look at the Gematria. This is why I'm invested. This is what I like to see. Social Finance Inc. equals 137 in English ordinal. 137 is the 33rd prime. That's why it's important. If you ask, well, why is you talked about 33? Well, 137 is not 33. Well, it is because it's the 33rd prime, which means it can only be divisible by itself and 1. So 137 and 1 are the only two numbers that it can be divided by. Very important. We have Social Finance Incorporated stock equaling 137 in English reduction. And we have buy SoFi stock in 2023 for large gain. 137 English reduction. Now, this does not mean you go all in because you see this Gematria decode. That's something I had to learn myself. I'm not even going to lie. Going through the process when I, found out about Gematria and stocks with GameStop. When I figured out I was in GameStop way before it actually had to squeeze, I had the 33 numbers, my name. I thought I could just go willy-nilly and, I was untouchable. While I did still make good money, I, look, if the knowledge I had now, I would, if that ever comes up again in a different stock, I'm way more equipped with knowledge even without Gematria to make the better decisions, to protect profits, and to take more gains when it's there, because you never know what happens in the stock market. So again, even though this Gematria decode says that, and not even telling you to buy, but if you consider buying this, use risk management. But I keep note of that. I like seeing that. We have SoFi stock in the planet Saturn because Saturn entered Pisces. Saturn is the responsible planet. It's the authority planet. Banks, they run the world essentially, so they're the authority. So you want to see that. 330 English ordinal. We have SoFi in water. Now, think about this. Pluto is entering Aquarius. Okay, that's the last planet to enter Aquarius. That's a 248 year astrological realm. So that's what's happening. It's entering Aquarius. So we're going to be in the age of the Aquarius. But also with that, we're in Saturn's entering Pisces. Pisces are the two fish. So that's also a water connection. And so when you add those together with banks, currencies, banks like river banks, flow of money, it's the same thing as water. But what SoFi is doing it's something a little bit more different. I have a buddy, and my friend Devin, who's on, he knows him, Ryan. He's also an investor in SoFi, but he also uses the bank as well, and he always gives it praise. They don't have like an actual physical bank, so they're more fluid. I believe if you want to take out cash, it's a fee. So there's no like brick and mortar spots, just kind of like the old. So they're trying to be more modern, new age. They do stocks as well. So definitely take a look into them. Social Finance incorporated SoFi stock and Sofi Technologies incorporated in 2024. They both equal 133 in the Chaldean cipher. Then we have a lot of 67s. Now 67 is important because it's 33 spots away from 100, which is funny. And my football number in college one year was 67. 33 spots from 100. So we have water equaling 67 in English ordinal. SoFi was Saturn. Cronus in Pisces, which is Saturn, but in the Roman god. Cronus in Pisces. Saturn controls banks, banking stocks in 2023, discounted bank stocks. That all equals 67 in the reduction cipher. So you see the connections there. Very, very important. And so we're going to get into the fundamentals of SoFi. The assets and liabilities, it's plus 55 billion. So you take the 55 billion assets off their out liabilities with their 934 million shares outstanding. So I estimate, this is ballpark, quick estimations. Obviously, you need to look into it. But when I look for just straight value off the bat, I go straight to the fundamentals, assets minus liabilities. So my estimation for fair value is about $5.88. At the close, it was at $5.74. So in my opinion, I've been nibbling on shares. That's what I'm doing. I'm not saying anybody does what they need to do. They need to do what they need to do. No banking exposure in business commercial banking, which has been going down right now. So that's really good. That's important. CEO Noto continues to buy shares. He bought in like the 570 range, maybe about a week and a half ago. That's in the news. Check that out. And the only issue, well, there's always more issues. You never know what the future can hold. But student loans not being repaid, if paused again, will hurt in the short term. The most recent extension has cost the bank at least $6 million in lost profits. SoFi says it could lend a total of $30 million in losses if it continues through August. So about $30 million could be lost if it continues through August. I'm kind of already putting that on the cost. I don't know what's going to happen, but I feel like they should maybe chalk that up as an L. So, I feel like this is an opportunity to still get low prices because it's not going to be like this forever. Something's going to happen with the student loans. And what's great about SoFi, they lend money to very high class type people, I would say, where they know they can repay these loans. So I'm not too worried about that, but that's something to look out for if loans do get paused again. And so now let's get into the D.A.T.A dividend capital, the D.A.T.A Divi pack. So this is what it was. I closed. Let me get this up a little bit. It's kind of large. There's a lot of information here. Get this up. All right. So the account value right now for the D.A.T.A dividend pack is $1,363.28. That's what we have invested in. That's what's in the account. So now these are like the 12 stocks we have. And so I'm going to just go through the list. We have AOS, Gold, ANDE, Coke, KO, EPD, Comcast, O, KMI, APAM, ACL, UAN, LNC. So the top two performers through March and through since the D.A.T.A pack has been happening is AOS and Gold, which Gold was an underperformer for a good while, but since we're going through turmoil with the banking industry, that's why you see Gold up. AOS is a water treatment, water heater maintenance service. We're up 10% on that one right now. I only have one share because it's a $60 stock, $66. We have 3 shares of Gold. We've already gotten a dividend payout on that. We have that's sitting at $18.53. Some notable honorable mentions, because we're going to talk about the bottom two performers. Another one I really have been liking so far is KMI. I bought another share of KMI. That's sitting at 16.79. We're down 4% on that, but again, it's all right. We're in a bear market. We need these prices. So the bottom two performers, which I have an actual presentation on LNC we're going to go over. But UAN, so what UAN does, hold up. Oh yeah, my camera. Okay, my camera was going all wonky. All right. So what UAN does is It's like a nitrogen ammonia fertilizer. Definitely during a recession, it's going to always be around. They pay a 22% dividend. Now they usually say you don't want to invest in dividend payers that high percentage because that's a lot of cash. But it's one stock, and I feel like it's used to be a $300 stock, and it's sitting at about $86 right now. And my average is 98 with 2 shares, and I already had that $10 payout, which is really nice. So again, I'm gonna be easy on it, but I really like it. Fertilizers, they always do well during recessions because everybody still has to eat. Nobody's not going to eat, right? And so LNC, this is my most bottom performer thus far, but I have the most shares, right? I'm down $100, almost $97, down 23%. My cost per share is 27.22, and it's sitting at $20.70. That's the bottom performer. But I have a presentation on why I've still been buying at these prices, and why I feel like it's a great stock for the D.A.T.A dividend pack to have a nice core position in long term. It's insurance, it's financials. So again, I suggested it around $34. So I do have a couple shares around $34, but I have been buying all the way down. It's a dividend stock. It's in the insurance industry. Headquarters Randor, PA. Now, this was at $34. The PE ratio was at minus 2.9x. Again, that's very undervalued. At $34, I might add, that's what it was. But now at $20, that PE ratio is even more negative. I don't know it right off the bat. The debt to equity is a little high, but that's okay. They have a lot of cash on hand for the dividend, as we're going to go over. 2.91. We want it under 2, but sometimes you have to make some exceptions. And now the dividend yield when I recommended it was at 4% at 34. Now it's sitting at 8.7% because it's at $20. As you see, this is what I have in it, about $400. I'm still buying. I bought some on Friday at the close. I believe long term this will do well. And then this has been its stock chart. It's through its whole lifespan, but it hasn't seen these levels since COVID, during the COVID crash where it hit like $17. But I have a pretty good presentation on it. And this is what some gematria I have. LNC stock 2024, because I'm buying now for 2024. 333 in English reduction. Lincoln Financial, Saturn in Pisces, 137 reduction. Cronus in Pisces, insurance industry, 333 in reverse ordinal. Then we have LNC, Cronus in Pisces, orientation, Saturn in Pisces, Cronus in Pisces, orientation, 333 English ordinal. Ellen.G. Cooper is the CEO. She became the CEO last May 2022. She was already part of the executive board, and I think she made some pretty good decisions on canceling the share buybacks for now, for the economic times that we're going ahead. But she has Ellen.G. Cooper will be good CEO for LNC, 322 English ordinal, like Skull and Bones, 322, or in reverse, 223, much like 2023, the year we're in. And here are some article notes that I pulled for Lincoln Financial. And this is from Seeking Alpha. The company provides a variety of insurance and retirement solutions to individuals and groups in the United States and stands to benefit greatly from rising interest rates. The PE ratio in 2023, it should say, is 3.6. They recommended this article at about $36. The stock is an excellent buy because its earnings per share are expected to rise in the coming years as interest rates rise. The company has a consistent growing dividend and has increased its dividend per share for a long time. It increased it again last month to 45 cents per share. Even during economic hard times with the stock, it increased its dividend. Share repurchases have reduced the number of shares outstanding, increasing shareholder value. It's not doing that anymore, but it does have a nice price valuation now. Let's see. Let's just go to the financials. So the assets and liabilities is 4.1 billion. All right. And so while it's sitting at $20 right now, I did quick math at $25 share price. The market cap is 4.23 billion. And so we're under market value right now, in my opinion. And so we have enough cash on hand for dividend payout and growth. Now, look at this. If we go to the bottom here, you see their free cash flow. Their free cash flow is $2.23 billion. All right. So when we go to their dividend payout, which is 45 cents per share, that's $1.80 yearly. So $1.80 times the shares outstanding of 169.2 million shares. That's $304.5 million in yearly dividend payments. You see, they have enough cash on hand to continue that dividend. And so for me, I've been buying. I've been liking what I see. And what I also understand is they got caught up with the Silicon Valley situation because they had about $90 million as a bond in that bank. So that's part of another reason why it went down in share price because of Silicon Valley. And you have to understand, okay, they lost 90 million due to Silicon Valley. Silicon Valley was a top 20 bank before it went down. And so as a conservative financial insurance company, you're going to at least spread around on banks, right? And so I'm happy to see that the damage is only 90 million. You know, I feel like that's par for course if you're a company like that to have that much money in a top 20 bank. So I'm not too worried about that. Now, an issue could come in is if we continue to have bank failures and they continue to pile up different impairment costs due to these banks. But you know, it's a risk that I'm willing to take for the portfolio. Again, risk management. It may be my core holding in the portfolio, but I just, you know, I have a lot of conviction in it by the numbers. Well, shoot, that was a presentation. We can just get into Q&A discussion a couple minutes early, and I can look at the charts. If you want me to, if you guys want me to pull up any charts or any other stocks, we can do that as well. So, yep, I'm just going to open it up now. Anybody have any questions?
Hey man, thank you so much for walking us through this. This is actually pretty helpful. I did think the last stock you just brought up.
Yeah.
You said that the PE ratio was like 3.577 or something.
No, hold up. Let me go back. Right now, LNCs. So when I
way higher than 2 or something like that. I think that you said that you're in.
Oh, so with this article in Seeking Alpha, this was like in January. This was like in January. So this was before. Okay. This was before I got in. I got in LNC like February. So that's when they were sitting at like 36, 38 bucks. And that's when their PE ratio was starting to go up. But there's other, you know, there's people people look at earnings because it's price to earnings ratio. So people, when they look at earnings, they sometimes have different calculations. So say if you go to Yahoo Finance or Thinkorswim, they'll have kind of varying PE ratios based off whatever they calculate off of.
It's almost like a little window, huh?
Yeah, it's like a window. So, but it's sitting way below that now though, because it's at $20. So the price is way below that, and its earnings has pretty much stayed what it was. But the issues with this stock right now was the silicon banking thing, and nobody. I mean, is insurance an attractive industry to invest in during a bear market? Like, so that's why I'm in it, because you know you just sit on it, you accumulate at low prices, and when the day comes. Oh, and what I want to do is I actually want to pull up the stock chart for this on Yahoo Finance. So I'm gonna stop sharing my screen to get to another one. Hold up. Share screen tab. All right. So do you see this Yahoo Finance screen?
Yep.
Okay. Awesome. All right. So I have the 5-year chart on it for Yahoo Finance. You see where it's at right here. It's at $20, but you see for the last, since 2015, it's been trading shit, dude, pretty much above 50 the whole time, besides a couple of times. And also it had its crash in 2020, but everybody had that crash, and then it went on a run back up to what it was trading at before. And in a lot of cases, I feel like we're in a situation with the markets where it's kind of like COVID again. The markets are trash. So again, with risk management and a long-term mindset, if you just nibble on shares here and there, I think it'll be good at long term because they have a lot of cash on hand. The owner, the CEO, cut share buyback, so they're even keeping more cash in their pocket, because a share buyback is when they buy shares of the company to kind of keep the price afloat, which is necessarily a good thing. But they just did this recently, and I feel like they're doing this just to withstand another impairment costs to see if a bank goes down again. So I think it might be a smart move, long term, but short term pain for sure. SoFi, what's interesting, so I'm going to go to SoFi. With SoFi, the very first day of trading for SoFi is very interesting. Yeah.
Just to clarify, so you said that in the down market, not ever really a terrible idea to go after, I guess, reputable like insurance company. What about when it's not a great time to invest in an insurance company, or is that kind of like pretty?
So what the article brought up, interesting, good question actually. What the article brought up is when interest rates are high, so when it costs more to borrow, that's when insurance companies are good to buy, because nobody wants to get into them, and that's what it's right now, because insurance rates are high as fuck and it's killing us. But when insurance rates are low, kind of like when they were a couple years ago, you saw the prices of the stock, it was 60, 70. That's when you want to sell, because you're at the top,
those things are going to continue to go up and down all for the rest of our lives.
Yeah, and it's going to keep, and that's where you get in, get out.
Get out. Damn.
But the thing is, if you could get in, say if you get that long-term tax gain, because you could get in for a year,
right.
say if I'm in now, I'm in now. A year from now, why is my camera doing this?
It looks fine on my side, I think.
Okay, so I'm not blinking.
Yeah, you are now. Yeah.
Okay, hold up. I'm gonna cancel my screen real quick.
I be running them demos too hard. Every time.
Yeah.
You're live, something happens.
Nope. So to answer your question, so the good time to sell insurance stocks is when insurance rates are low. That's because when things are good. Things aren't good right now, so people aren't really caring about that. So that's why I'm in. Let me pull up SoFi real quick. We have 18 minutes left. I'm pulling up SoFi. I'm going to get my camera back on shortly. 1 second. We talked about 22 in water. So look at this. The very first day of trading, the close, like you brought up, Dev, would you bring up? 1 can sometimes be a placeholder. The close 1220, and the volume 1.37 million. That's the very first day of trading for SoFi. That's the numbers we like to see. So I thought that was very interesting when going back, because you have to understand the birth.
Sorry, where in the graph are we looking here?
You see this right here?
Okay.
Look to the left. You see that white box? Now look at the close.
12.2.
Yep. And you run that one as a placeholder. You have that 22. But look at the volume, 1.37, 137. So that's those same numbers popping up, 22, 137 that we've been talking about.
Oh, Jesus.
Yeah. Yeah. All right, I think my camera is Gucci now. Back. Yeah. Off top, or do you have any questions or anything like that? Any thoughts? What do you want to?
I have a question for the community, actually.
All right.
So I just want to know, what is a feature for data productions media's community? That's what I want to know.
What is a feature?
What is a feature?
Oh, future.
Or your vision?
Okay. What is my vision? So, big vision. So, I kind of whittled it down. It took a lot of years, but my vision now is still the 2 branches I talk about a lot. It's stocks and sports docs, stock market and sports documentaries. And so, what I plan to do is to continue to build my video content, my video platforms, continue to generate money from the stock market and a net worth, so I could put it back into data. Capital investments and data productions media. So my goal is to maybe one day do a convention to bring us all together, and we can learn from all the different other decoders and spiritual people within the community, and I feel like that'd be very valuable. Another thing I would like to do later down the line is maybe start like a mystery school, quote unquote, a mystery school. That'd be awesome. To where I could bring younger people in, and we can teach them the ways of gematria and spiritual things, so they can go into the world and be more equipped. Because obviously the public school system as it's set up right now is set up for failure. I only had one money class in high school and college, for real. Me and Devin went to the same college, and we both had business degrees, and we've learned a lot in business. Don't get me wrong, like we learned a lot, but what was it? Yeah. Was it in totality? In totality, was it a great education for us, getting us equipped for what the reality of the world is? I mean, it did a decent job, but it is what it is. But yeah, so the vision, the big vision is stocks and sports stocks keep growing. Just keep focusing on the stock market to grow the net worth of the community and myself, and continue sports documentaries. But also, what I plan on doing is March 2024, I'll have 33 documentaries on oh my God. I just did the 666. All right. That's funny. I'll have 33 documentaries on March 2024. And then I'm going to make 33 for 30. The ESPN 30 for 30. I'm going to make Data Productions 33 for 30, and I'm gonna compile that together with all those sports documentaries I've done on my Patreon. I'm gonna do artwork for it, and I'm gonna have like a nice like DVD cassette package for it. And then I want to do another documentary soon. Hopefully, if Next Level LTNC ever does anything, I want to do a documentary on that. And yeah, so just content. So that's kind of the future, I guess. Keep producing content, keep helping people with financial literacy, and using gematria as a tool to learn about yourself, ourselves, and the world around us.
That sounds great, man. That's why I'm here, man. I'm here to learn. I'm here to join you, join this community, and see what you got for us.
Yeah. Are you off top, or are you invested in any stocks, or do you crypto? Like, what do you do?
Oh, not yet. Right now, I just want to learn first.
Yeah. Awesome.
And that's why I'm here.
Yeah, that dude. I know what I love that. I appreciate that. And I that's humbling because I feel like I have a lot to give. There's a lot in this Patreon community. I have a lot of notes you've probably seen if you went through it. Thousands of decodes. A lot of work has gone into it, and it's really the person. It comes down to the person who wants to study and learn. Um, and if you can do that, the world's going to be your oyster. Abundance going to flow to you because you've put the work and effort in. Devin understands that as well. He's very hard worker and he's doing a lot. You're going to Brazil next week, right? April 1st, right? Next Saturday. Brazil is going to be great, Devin. You're going to have a great time.
I appreciate it, man. I had another question for you on
Yeah.
the PE. So, price and earnings. And this is something I need to go back and actually read the Intelligent Investor. So that's on my homework my list, But regarding that, are there other specific industries that you would say that matters more than others in as far as how you kind of weigh that piece to the pie before you make a purchase?
Okay, and actually this is great because wait, I'm gonna stop presenting. I'm just gonna. All right, hold up. I'm gonna get back to the first tab before I answer. All right, so PE ratio was actually something that I really dug deep into maybe a month or so ago. I've heard of it, but I've never really done extensive research on it. And so I wanted to go into it more. And so for me, I feel like it adds a different angle to it. It's a simple way to kind of understand the valuation of a company compared to their price. And actually, let me just go to Investopedia or something, and we will talk about this. And so that for the S&P, the average PE ratio is like 30 or something like that. And so let me bring that up. Actually, let's see. Yeah, the mean is 16. Actually, no. Okay, let's see what it says. Current market valuation Y charts. See, again, everything is just a little bit different. Everybody has just a little bit different. So this is what current market valuation says. The PE ratio is a classic measure of a stock's value, indicating how many years of profits at a current earnings rate it takes to recoup investment of the stock. The current S&P 500 10-year PE ratio is 28 even. This is 39% above the modern market area average of 20. And so that suggests that the market is overvalued. But that's the market we're in now. In general, we're in an overvalued market. Inflation's rampant. They print money like crazy. So it's not like the olden times. And so that's why I kind of like companies with lower PEs because they're not overvalued by that ratio. But you have to go into a lot more. Like you have to look at their assets, you have to look at their liabilities, because even though they're earning a lot and their price is low, that might be because they're really bad with their money. Like they're so much in debt. Investors understand that, and that's why they're not in the stock pushing it up. So it's just one little piece of the puzzle. But when I started to formulate it, it was a good one.
And basically, it really just comes down to leadership and decisions, like the right people making the right decisions, not doing things offhand, off top.
100%. And that's the issue with this market these days because when in 2021 happened, the stock market was great, but it was a lot of free money for these businesses, which gave them incentive to lie, to do things you normally wouldn't do because the money was really good and there's really no repercussions. How many businesses, how many executives are really going down right now for stock fraud or pump and dumping or anything? None really.
Yeah.
Only retail, only small fries are going down per usual.
Going down.
And so yeah, that's why risk management. So I look for good leadership, obviously, but there's only so much you can do for good leadership because at the end of the day, these guys are salesmen and they got to make money for themselves. So will they lie to you? Yes. So that's why we use risk management. You only nibble here and there. Don't go all in on anything because it will humble you quick.
Yeah, for sure. Appreciate it.
So let's finish up with my article we talked about. So I got in a little bit of a Facebook discussion with somebody who said, "Oh, you really didn't predict anything with Saturn Enterprises." I said, "This is what I said." With planet Saturn Cronus entering the last zodiac sign of Pisces, equities companies that should do well will be in the financial sector. And you have to have the mindset I have. Value investor, I'm looking for discounts as we're getting right now as they're falling. Within the sector, this includes banks, insurance, and asset management companies. The companies within the industry that prove to be flexible and fluid, water, Aquarius, Pisces, fish, with the changes in the world will be huge opportunities for investors looking for discounted growth in the next few years, which we're getting. Like you said, March 7th, boom, boom. So I think we're spot on. I think we're in the right stock for SoFi. I think it's going to be really well in the future. And also, what's interesting about Pisces, it spans 330 third degree to 360 degrees celestial longitude. So again, that 33 is popping up 33 degrees. That transformation of that level, you're going to the next step, which is very important. A 330 degree zodiac, 330 zodiac degree, 333 English ordinal. Big banks are fisheries in the economy, 333 in ordinal. So these are the things that really started to pop up, and this dropped again February 13th. So we were well aware what was popping off, well aware. So the last 5 minutes, I'm just going to let you guys know what we have in the short term. So next month, I have to think. I don't know if I'm going to be adding any more stocks to the Divi pack for now. I kind of feel like the market might take a downturn a little bit, not like a huge crash or anything like that, but not like a huge crash or anything like that, but something just to sit back and watch on. The S&P is looking pretty good. I'm gonna pull it up to see what we got going on, and hopefully moving forward, we'll have more people. But again, this is the first time, and I gotta be a salesman and bring people in and stuff like that. So again, thank you guys for coming to this. It was amazing. A couple minutes left.
Hey man, I really appreciate it too, man. Honestly, I know you put a lot of work into this, so I was really excited to jump on, and I definitely learned some things. And I'll go back through that PowerPoint presentation, continue the conversation, man.
Yeah, man.
For sure.
So before we end, I'm just gonna look at the S&P real quick. So you see what's kind of happening. You see this was COVID times right here, and so we had the COVID crash right here, and we just boom went straight up. And this was the top of the market, and we've been in a downtrend ever since. But look at this. It's been a full year. It's been a full year in this trend right here. That's a lot of accumulation. So this is definitely a bottom out of the market because the S&P never really works like that. It always kind of just goes slowly to the right side. And so I think this provides a lot of opportunity for us. So, yep, guys, I think I'm just going to end it here. This was a great call. I'm not going to spend too much time. It was a great focus call for what it was. Let me end my screen. Let me get my screen. Stop sharing so I can see you guys. All right. Off Top World, thank you for coming. Hopefully you learned a lot. Again, go across the different information. Devin, thank you again. My best friend right there. Much love. Brazil's calling your name, so just let us know how that is, man.
Absolutely. All right, y'all. Off top world, good to meet you, bro. Hope you're doing well, and hope y'all have a great Sunday. Appreciate you guys.
Yeah, appreciate you guys. Be good.